Hey guys, what's up? Alec back with the daily stock market, and look at that. Friday we had an absolutely green day. ChargePoint was leading the pack, up 11%. Fubo TV up 10%. Carnival up 10%. XPEV up 10%. And the list goes on and on. So today we're going to dive into a few different stocks like ARK and Unity Software. So make sure you stay throughout the end of the video because we're going to give price points, price predictions, where I'm looking to buy in at. Make sure you're subscribed with post notifications on. Hit the like button if you find value in this video. So without further ado, let's jump into some of these stocks. Okay, so the first one up we have is ARKK, ARK Innovations ETF. And yes, it is an ETF. It is down 37% in the past 3 months. So the S&P 500 and the NASDAQ are significantly outpacing them. If you invest in SPY, it is outpacing the ARK ETF by a lot. Down 67% in 1 year. And if we pull out to the 5-year chart, it's only up 34% in the last 5 years. And at one point, it was up around 200 to 300% in the span of just 12 months. So let's talk about if this is a good place to start buying ARK Innovations and if it should be a part of your long-term portfolio. Yes, it is a little bit more risky than a normal ETF, but I think if we see them under $30 per share, I'm not passing up that opportunity. And I'm just going to be consistently dollar cost averaging into anything under $35 per share. If you didn't know, the fund is mainly comprised of technology and healthcare. If we zoom out to exactly what the top 10 holdings are, number one is Zoom with 10%, which isn't my favorite stock. So that's why I'm not going heavy on ARK. We also see that Tesla is the next biggest position, which I do like. Roku is a very large position. And some of these stocks could hit 300% gains. And if that happens, the fund will be sitting pretty and ARK could definitely recover very swiftly if something like that happens. CRISPR is 6% worth. CRISPR is an interesting one to look into. If you want to do some homework after this video, I highly recommend deep diving into CRISPR and doing some of your own research. We'll also do a deeper dive on the channel, so make sure you're subscribed with post notifications on so you don't miss any of those future uploads. Path is 5%. Block is 4%. Exact Scientist is another interesting one that we'll do a deep dive on. They're 4%. Teladoc 4%. Coinbase 3.8%. And we could do a huge deep dive into ARK, but I'll save you guys some time. And it really just boils down to growth stocks. Growth stocks have been hit so hard in the last 12 months, 6 months, 12 months that ARK has suffered alongside with them because they mainly invest in these high growth stocks. Okay, just since October to June, they've fallen quite significantly, and growth stocks have as well. So if you have a higher risk tolerance, under $35 per share, dollar cost averaging, probably a good thing to do. Personally, I think they will go under a 5-year low. So even under $30, under $28, I think is highly probable and possible for something like ARKK. With the market sell-off, I think it's going to continue to sell off a little bit longer, and then we can see a huge pump from these growth stocks once again. I think it's still going to take at least a few more months. Now let's talk about Unity Software a little bit. They're up 8% on Friday, and they're an interesting stock. So let's dive in a little bit. Down 61% in the last 3 months. Is it a good deal? From highs, they're down 82%. They're at an all-time low. They're in free fall mode, and they IPO'd at $75 per share. Also, they're a non-profitable company that is on the edge of profitability, which could be a good turning point for their stock price. 52-week high is $210 per share with a market cap of $10 billion. Okay, so here we have Unity Software's total revenue pulled up, and we can see the percent growth quarter over quarter, growing every single quarter without missing an off beat. Now, year over year, we can also see they're growing around 40% per year. So let's dive a little bit deeper. If we see them growing consistently on revenues, why is the stock price down 80%? Here we can see that they're getting further away from profitability. In 2018, they were closer to profitability than they were in 19, 20, or 2021. So some good things have to start happening with the profitability. That's why it's going down. This market currently hates unprofitable companies. So if you want to be a little bit more safe, look for companies that are extremely profitable on their net income and their EPS. It looks like their balance sheet is significantly getting worse just in the last year. In Q1 2021, they only had 23% liabilities to assets. Now it's closer to 52% in Q1 2022. If we zoom out to the annual, we can actually see that their balance sheet was sitting pretty the best in 2020. Now, 50% ratio for liabilities to assets isn't the worst thing in the world. It could definitely be a lot worse in the 60 range, 70, even in the 80% range. However, you guys know when I look at that debt to asset ratio, I like to see it closer to 20 to 30%. Unity is a promising play on the growth of the metaverse. The stock once traded at astronomical valuations. The tech crash has brought the stock down back to earth. Some of the crash has been due to the monetization issues that are expected to hurt the company this year. Management has reiterated its goal of at least 30% growth annually over the long term. The stock is priced like a broken growth story. I expect a swift rebound. So if we look at some key metrics, we can see that recall that Unity is a real-time development platform enabling 3D, AR, and VR development. Its software is used largely in modern games, but it's also used across many other industries: architecture, automotive, and film. We can see what the software looks like below. Customers can use Unity software to visualize anything. There is a reason why Unity is so commonly associated with the metaverse. Without Unity, there is no metaverse. In the quarter, you generate 36% revenue growth to its $320 million. That growth was largely driven by 65% growth in create solution revenue, which refers to revenues earned from using the software. Continue to read the rest of that article. Pause the video if you want to read the rest of it, but we'll move on to net margins, as its business model has inherited operating leverage. Based on the conservative 1.5 times price to earning growth ratio, the PEG ratio, which is an important one to look at, I could see you trading at 13 times sales in 2026. That suggests a 300% upside, or 36% annualized per year over the next 4.5 years. This is such a name which I expect to gain a steep premium relative to the tech peers, with the main driving catalyst being a recovery in its monetization efforts. That means much of those returns could be front-loaded, as this is arguably one of the higher quality growth stories in the market today. The key risks here are twofold. First, it is possible that the company is unable to fix the monetization issue. I find such an event like this unlikely, but the possibility must be stated. Second, it is possible that the products lose relevance. Perhaps the metaverse doesn't meet expectations for growth. Perhaps people stop using their smartphones so much. The bullish thesis is largely dependent on the long-term growth rate, and that is predicted on the metaverse being an ever-growing secular story. I rate the stock a strong buy. This isn't the cheapest name in the tech sector, but it is one of the higher quality growth stories. So that story does tell a lot. That article does tell a lot. And we're at an all-time low. We're in free fall mode. So personally, I'm dollar cost averaging slowly. I'm looking for a recovery to start buying a little bit heavier. It's just scary to buy in free fall mode. So I really want to see this under $30 per share. and closer to even $25 per share before I start buying large amounts of Unity. But in my metaverse portfolio, this is one that I am dollar cost averaging in. And if you're looking for a good stock with high risk, high reward potential to add to your metaverse portfolio, this could be one worth looking a little bit more into. And the last one we'll look into is Spotify, ticker symbol SPOT, down 7% in the month, 28% in the last 3 months, and 60% in the past year. Okay, from highs, they're down nearly 75%. They're at a 5-year low. This is also the lowest that Spotify has ever traded. In the past, it's been as low as $106. So Spotify is also pretty much in free fall mode right now as well. So you guys know how I already feel about that. Dollar cost averaging could be beneficial, but also being patient could be beneficial at the same time. They IPO'd in 2018 at $165. And if you bought at IPO 5 years later, 4 years later, you would be down around 60% on your investment on Spotify. So let's look into some of the numbers. Okay, we have Spotify's net income and total revenue pulled up. First, we're looking at the total revenue. We are looking at quarter over quarter. Looks like it is growing. We have their total revenue at $2.6 billion. Okay, if we look at annualized, we can see that they've been growing consistently their revenue around 20 to 30% every single year. They're up to $9.6 billion in annual revenue, which is amazing. But this is where we see why their stock price is down big. Again, it points back to that net income. Okay, you can actually see since 2017. They haven't even got to profitability since they IPO'd. They were losing $1.2 billion in 2017, and they made that up significantly in 2018, but then they started going the wrong way again in 2019 and 2020. If we zoom into the quarterly on net income, we can see that they have posted a profitable quarter of $131 million, which was huge. But the question is, can they keep that up, and can they have a whole profitable year? Can they have 4 profitable quarters in a row? So that's the question. Their balance sheet is also looking atrocious, with their liabilities almost 70% compared to their assets, which is a huge risk for any company. And with Spotify, they are obviously at the high risk factor, but they also have that high reward factor. So like I was saying, high risk, high reward, and the reward is looking a little bit more attractive now that they're down around 75% from highs. If you were buying a long time ago, obviously today the risk versus reward is looking a lot better than it was just a few months ago. Analysts have a 52% upside on Spotify. We have not many analysts coming in, and a lot of them are 1-star analysts. However, we do have some 5-star analysts coming in. Mark Mahaney, Eric from Goldman Sachs, with a $133 price target. He has a 63% success rate. Just reiterated with a buy price target of $150 per share in the next 12 months. Reiterated 12 days ago. Douglas from Credit Suzy. And you can see where some of these other analysts are coming from and some of their price targets and predictions for the next 12 months on Spotify. The lowest analyst has $103 for Spotify over the next 12 months. So like I was saying in the beginning of this clip here, that the risk versus reward is looking a lot better today than it was just a few months ago. So make sure you hit that subscribe button if you haven't, if you appreciate my content and these videos that I put out for you guys all the time. If you can't tell my voice, I'm a little bit sick right now, sore throat, but I still came on here and made this video for you guys with detailed content, setting us up for the week ahead with 3 deep dive stocks. So if you appreciate that, smash the like button, subscribe, share with a friend. Let me know in the comment section what you guys want to see next. Thank you guys for all the love and support you've been showing on the videos. Also, make sure you guys follow me over on Twitter at TDSM Stocks. I post valuable information every single day on Twitter that I'm not posting on Instagram, and it's banger content, so you're not going to want to miss that because there's some great detailed information I post on Twitter every single day. I retweet everything that I think can be helpful for you guys. So I'm a retweet machine. Thank you guys for all the love and support you've been showing on the videos. I'll see you in the next one. Remember, don't time the market, buy the market. Peace.